What's up, BK fam? This is Brian Horton again with BK Trading Academy. We have an exciting one for you guys that we have never discussed before in our YouTube channel, that we often discuss regularly with our students. And I feel that now's the time to share this with you guys because I know a lot of you will benefit from it. Some of you may know of it a little bit, but I'm going to elaborate just a bit on this today in this video, which is the COT report, Commitment of Traders. This report is what you need. It's the ultimate indicator out of all indicators that will help you to enter a profitable trade, to know what trend you were in and how to profit with the COT report. So I'm going to deep dive into this for you. Now, if you're afraid of numbers, if you don't understand math, and if you don't really understand these type of concepts, I want to give you a disclaimer that it could be a little bit confusing for some people. However, if it is, I want you guys to replay this video, put this inside of your YouTube trading playlist so that you can play it often if you get confused or if you need a reference to come back to. But guys, here it is, the Commitment of Trading report. I'm going to break it down for you right after this.
Yeah, I know I got problems and I don't know where to go. I don't want to put the blame on you. Someone put it on my own.
All right, guys. So the very first thing that I want to show you is the CFTC site. This is a U.S. government site, Commodities Futures Trading Commission. Now, I'm going to share with you an easier site that you can gather a lot of this data and a lot of this information a lot easier. But I want to provide you with the main site in which the big institutions and the companies submit their trades to so that we can have it as the public. So the CFTC stands for Commodity Futures Trading Commission. So you want to go to that site, and it's cftc.gov. All right. So keep in mind, guys, that this site is where the big institutions, the hedge funds, the banks, the big boys who are actually moving the market, where they submit how many longs or how many shorts that they're entering inside of a trade or inside of a currency or Forex pair. OK, so this is how it looks like. You want to go to cftc.gov. It will take you to this page here. Then you want to go to market data and economic analysis. It's right in the center of the page at the top. And then scroll down to commitments of traders. Now you want to scroll down here until you see currency legacy reports. And then the second column that says Chicago Mercantile Exchange, you want to identify this here. And then you want to click where it says short format. Now, when you go to short format, it will look like this. This looks like a whole bunch of jumbo mumbo. Like I said, I'm going to show you a site that will make this a lot easier to understand. But I want to give you the basics first, guys, before we get into the easy part. Now, what you want to do is identify what currency that you want to trade. So if you look here, you will see that there are a lot of futures contracts here, which you'll see Euro short-term date. You'll see USD Malaysia crude oil. You'll see butter. Yep, butter is a futures that people trade. There is milk. There is all kind of things. There's non-fat dry milk. There's a whole bunch of things. So in order to cut all of that noise, if you're on your computer, if you're on a Mac, all you have to do is hit Command F. F as in find, okay? Or if you're on a PC, hit Control F, and it will bring up this box here at the top, and that way you can search. So now let's go ahead and look at JPY. I'm going to type in JPY, hit the enter button. So I want to look for the Japanese yen, which is right here, and this is the report that the big banks, the institutions, those who are actually moving the market, submit to the CFTC site, and now we have access to it. Now, I just want to let you know, the big banks and the institutions, they actually submit their reports to the CFTC on Tuesday every week, but we don't get that report until Friday around 4:30 EST. So although they've submitted their longs and their shorts to this government site, we don't have access until Friday. So every Friday it refreshes and you will get that data. All right, guys. So the very first thing that I want you to look at once we've identified the Japanese yen, now we want to look for non-commercial and commercial. Okay. We're only focused on non-commercial. The non-commercials are the banks, the hedge funds, institutions, companies who are actually trading. They're speculators like us, and they're trading the Japanese yen or the Great Britain pound or whatever currency you decide to search. The commercial, they're also big institutions and hedge funds and companies. However, commercials are for those traders who actually are trading the currency to get a better deal, like they're hedging the currency. So for example, Microsoft or McDonald's. McDonald's have companies all over the world. They have companies in the United States and Canada and Japan and China. So the reason why they want to hedge the Japanese yen is not to trade it like speculators like us, but they may literally physically buy the Japanese yen. So the reason why they would want to do that is because they have companies and employees in Japan. Japan. So they want to buy the Japanese yen now, for example, because they know 12 months from now that yen is going to climb in rate, right? So let's say the Japanese yen is worth, let's say, I'm just throwing out a number, it's worth 67 cents per dollar, okay? But they know 12 months from now, it's going to be worth 90 cents per dollar. So now they're going to hedge the yen now and buy a whole bunch of it so that they can start paying their employees or buying furniture for their companies or food or whatever it is that they need to, because it's cheaper now and they know later it's going to be more expensive. So they're actually literally buying the currency hands on. Whereas the non-commercial here, they're just trading it like traders like us. Okay. So we're focused on the non-commercial. There are 4 categories I want you to look at. We're going to be looking at the long here. Then we're going to look at the short. And then we're going to look at the changes under the long category and then the changes under the short. And I'll break it down to you and what that means. Okay. So the long here, this number right here where it says 30,964, that means that the big banks, the institutions, the big boys, they actually have 30,964 contracts long, meaning that they've put 30,964 buys on the yen. How is that beneficial for us? Now, if they're buying 30,000, then that may be beneficial for us because that may let us know that we should buy. However, you don't want to just look at the longs. You want to look at the shorts as well. In this case, they have 130,593 shorts. So they have way more shorts than longs. So this tells me if I'm trading the yen index just by itself, I'm not talking about currency pairs where there's multiple currencies, but if I'm just trading the yen index, I may want to short sell. Because if the big banks and the institutions have over 130,000 short positions and only 30,000 long positions, I'm looking to short because they're the one controlling the market. All right. So that's how this works. Now, this number here tells me the long-term trend. So this tells me that there is 130,593 contracts. Now, in one contract can hold a lot of money. Now they have 130,000, which means that we're talking about millions and millions, probably even billions of dollars worth of money in these contracts alone. So this tells me the overall trend. This tells me that Japan or the yen is overall bearish. This tells me this long here, since it's not quite as much a short, this tells me that, hey, they also have long positions, but they also have short positions at the same time. They just happen to have more long positions. All right. Now the changes here, this tells me what happened from the week prior. So this tells me as of the week of October 17th, 2023, they've exited. That's why we have a minus here. They exited 2,175 positions on their long. So they're getting rid of their long positions. And when they exited this number here, this 2,175 contracts, it totaled 30,964. So if I were to look at the commitment of traders 2 weeks prior, if I add this number here and this number here, that's how many long contracts they had. As of this week here of October 24th, 2023, this is a Friday, I believe. This tells me that they've exited long contracts, 2,000 contracts. Now, at the same time, this negative number tells me that they also exited short contracts. They exited more short contracts. So in the short term, I like to look at this on a weekly basis. I trade this week to week where it says changes, and I trade this month to month here. This is my long-term direction here. Okay. So I may be interested in buying here because they've exited short positions here. So I know it can be confusing here. Now let's go ahead and look at the yen index here. So here's the yen index here. All right. So the yen index overall, if I go to the weekly time frame, has been bearish. Right? This is bearish here. All we see is this long downtrend. And if you've been following us for a while, you know that the yen is bearish because of their interest rates. Their interest rates is the lowest in the world. So if I go to my commitment of traders, remember, I like to look at this number to tell me the long-term direction of the trend. I like to look at this number to tell me the short-term direction of the trend if I'm looking to buy immediately or sell immediately. And because they released or exited more short positions than long, I may want to go long for this week, right? Just maybe a short pullback because I know eventually it's a downtrend, but since they've exited so many short positions, whenever you exit a short positions, it starts to pull back the other way. They've also exited long positions, but just not as much. So in the short term, I may be looking to buy, but in the long term, I'm looking to sell. Now, remember, this is just the index of the Japanese yen. I'm only looking at the yen. I'm not looking at a currency pair. Now, the currency pair is what can be confusing to a lot of people because a lot of times we trade two different currencies. And usually with the yen, we're trading the yen as the second currency. So what I mean by that is I may go to GBP, JPY. Now, if we look here, here's just some fundamentals of currency. If I look at this, GBP is the first currency and JPY is the second currency. So that means that JPY is the exact opposite. So remember when I said that the yen was short, but we see an uptrend. How is that possible if the yen is short? Because this is considered the quote currency, right? So this is considered the quote currency because it's the second pair. So we're never really selling a currency. We're only buying. So we're buying GBP, JPY. All right. So just to make this a little less confusing, because yen is the second currency of the pair, price is shooting up, and that tells us that the yen is weak, but it also tells us that GBP is the stronger currency headed up. So this here is the base currency. So whatever currency you're looking at first, here's the first one, here's the second one. Whatever currency is the first currency here, that's the main pair. That's the main currency we're looking at on a chart. So I'm looking at GBP currency on this chart. So when I look at the price here and I see that current price is at 184.868, that is the amount of the yen that it takes to equal 1 Great Britain pound. Okay. So I know that can be a little confusing. So you have to understand the basics and the fundamentals of currencies first. Okay. So we know in our minds that the yen is weak. So whenever we're trading the yen as the second currency, we're looking for price to head up. So to make this easier, I'm going to go ahead and look for JPY GBP. So if I'm trading the currency in this direction, then it will be the opposite. Now we're in a downtrend, right? Because now we're looking at the JPY currency. This is the main currency of the pair. Remember, this is number one here. This is currency number one. And now this is currency number two. So the dominant currency is always one. So we see that the yen is weak, and that's why we're in a downtrend. And if we look at the Commitment of Traders report, they have 130,000 plus short positions. And that's why in the long term, I would sell this. Okay. Now let's look at GBP on the other hand. Now, when you're trading currency pairs, you also have to look at both currencies. So let's look at GBP. All I'm going to do is type in GBP for a search. And there it is right here. Great Britain pound. Okay. And now remember, we're only looking at the non-commercial. We're looking at the long and the short. So the long here for GBP, they have 67,000 long positions, and then they have over 85,000 short positions. So remember, this here is tell us the long-term trend. So if I were to look at the GBP index for the long term right now, it's about 85,000. It's more of a short. So let me go to GBP index. I'm going to go to my index and I'm going to go to GBP, which is right here. And so the long term we have short, remember. So we have 85,755 short positions, and these numbers change every week, right? So now we are in a downtrend or obvious downtrend for GBP, which is right here, right? And so now we can see price starting to recover. So I'm going to stretch this out a bit. And now we see price made an all-time low right here, and it's starting to pull up. Now, the reason why is because previously in the past month, this short number was a lot higher and the long number was a lot lower. So now these numbers are starting to catch up to one another. And now we're starting to change into that uptrend. All right. So now let's go ahead and look at the short-term trend and how we should trade it immediately. Now, remember, we're looking at the changes here. So changes, we have 1,582 long contracts, and then we have 9,009 short changes here. So they added a whole bunch of short contracts to GBP just this past week alone. So they're adding more shorts. So let's go to GBP here. And so just recently, if we can see here, this is how you would have traded. So I'm going to go to the daily time frame. So we're going to go to the daily time frame. And then if we look here, we can see how price was headed down. 9,000, over 9,000 contracts. So this is the week we're in now. Today is Friday. And so this long wick here tells us that buyers have come in. The institutions started to go long. But remember, even though today is Friday, it's Friday morning and we haven't gotten the new reports yet. So remember, I told you the reports come out every Tuesday to the CFTC, the government, but us as traders, we don't get it until Friday after 4:30 Eastern Standard Time. So once Friday comes out, I can guarantee you that they've added more long contracts and they probably even exited some shorts. So we'll check that Friday afternoon. And because we don't get it until Friday, we may miss some major moves, but it's completely fine because these moves can take some time and you can still get in and enter at the best price. Now, we don't enter just because the commitment of traders tells us that they have more shorts or more longs, you still want to understand price action, which we teach a lot in our academy with our students and also what we teach here on YouTube. And guys, I want to plug this in. If you're interested in becoming a student, from this point on, we are having our academy at $597, and I believe that will be the base price from now on. And so just let us know, send me an email if you're interested, and I will give you a discount code for that. But from this point on, I believe we're just going to be changing it to $597. Just send us an email, and our email is in the description below. Now, remember, I told you I'm going to show you a website which makes all of this noise right here a little easier, so you don't have to hit find. You don't have to look at the non-commercial and longs, and it just doesn't look appealing. So the website I'm talking about is barchart.com. So all you need to do is type in barchart.com. Okay. I would suggest that you create an account. It's completely free. All they need is like your name and your email address. And once you do, you want to go here where it says futures. You don't want to click currencies. You want to click futures, because these big banks and institutions, they're actually trading futures contracts. Okay. So you want to do that. And then you want to click legacy report, not commitment of traders. You want to click legacy report. And once you do that, then you want to go to non-commercial. And remember, non-commercial here are the big banks and institutions who are speculators trading the market. So click non-commercial. And so when I look at GBP, I see that there are 67,100 long positions. Remember, the exact same thing that shows me on the CFTC website, 67,119. And then also on the short positions, they have 85,755 short positions, the exact same thing that shows me here on the CFTC website. So they just took those numbers there. And then what I'm looking at are the changes here. So long term, they're short, but for trading immediately for the week, this is what you want to look at is the changes. So the changes here, they have 9,000 or over 9,000 short positions. Things change. You have high impact news. So you want to look at that. And then for the change of their long positions, they have 1,582 long positions that they added. So they have more short positions than long positions. Over 9,000 short positions, I would have gone short, and I wouldn't have gone long because they only have 1,500 long positions. So also with the yen, you want to do the same thing. Another thing that I like is that you can trade metals as well. So when I go to metals here, a lot of people in our academy like to trade gold. How I would trade gold based on the COT report is look at the net positions. They have 149,000 net positions, meaning that they've looked at gold and they've evaluated it, and they happen to have more long positions than short overall. Now, if I wanted to trade just for this week, I'm looking at the long positions and what they've done. They've added 20,000 long positions last week, and then they've exited 16,000 short positions. So when you exit short positions, it's going to drive price up. And when you add long positions, it's going to drive price up even more. So my favor for gold is long. Now, again, I'm not just trading just because of the COT reports tells me to buy. I'm only trading long when price goes to my support. I'm going to identify my support and resistance zones. So you have to know price action and know how to mark your charts up. And then I would go long according to the COT report. So guys, I know that this can be confusing. I'll probably do another video just to kind of simplify things. Let me know if this was confusing or if you need a more simple version of this video so I can help you out. We talk about this all the time in our academy. This is the #1 indicator that I think that you should use when you're trading long term, especially as a swing trader, and identifying support and resistance zones so that you can be a profitable trader. So guys, that's it. Let me know in the comments, like and subscribe if this was beneficial to you, and I will see you in the next video. God bless.